Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Hump Day. Short week this week, so we're already at Hump Day, Wednesday, the 19th, February 19th, and we got a couple economic news releases scheduled for today, some important ones. So we'll start off with the PPI, or the Producer Price Index. This is the inflation numbers on the wholesale side. It's not a high impact, but I would say definitely a moderate one, as we the Fed and the economists most locally look at the PCE as well as the CPI numbers. Those are the consumer inflation numbers. Reason why inflation isn't as high impact as those is that they don't always pass over any rising costs over to the consumers. So that's why it doesn't have as high an impact. So we had a 0.1% growth in the month of December, and the projection for January is zero point 0.1, and it jumped up to zero point 0.2. So it did go up a little bit in the month of January, which is good news because we've been kind of concerned about too low of inflation. So when you strip out food and energy, we have the core PPI, and that creates the volatility. So this wipes out the volatility of food and energy with the pricing. So we had a zero basically in December, and projection for January was zero point 0.2, and it came in at 0.2%. So overall growth, we did have a bit more rise in the cost of goods on the wholesale level. And we got the housing starts for the month of January, and we had 1.05 million starts back in December, and for the month of January it was supposed to taper down a little bit to 945, and it dropped way down. So obviously a very disappointing number right there, 880. So that's a huge. You're talking what 225. No, I'm sorry, 125,000 drop in housing starts. Now a lot of this is due to the severe weather we've been dealing with on the East Coast and Midwest. They've been getting a lot of extreme weathers over the last couple months, and a lot of this is due to that. But with the home builders' confidence yesterday, you have to kind of wonder if there might be a little bit mixture in that as well. But I think once we see the permits, when the permit starts or request for permits, that will give us a better indicator, as those home builders will be applying for permits and will be future planning versus starts. But mostly I think it was due to the weather back east. And last but not least, we also had the FOMC minutes. Those are going to be released at 11 o'clock Pacific Standard Time today. So expect a lot of volatility today, especially leading up to it. You'll probably see some fluctuation. Markets kind of selling, going low or high. Or they may even go low, pulling money out of the markets just to remain conservative. And then after they read the minutes and get their feel of where they think the Fed's going to be moving, then they'll allocate their money into either equity markets or bond markets and whatnot. So it will be interesting to see if there's going to be consensus on their decision during the last meeting, if there was any concerns. So a lot of this stuff will be coming out in their FOMC meetings, in their minutes later today. So stay tuned for a quite volatile ride today. So we got the not much today. I did start this a little earlier than normal, but stock market started off a little mixed. The Dow was up. Looks like it might be kind of a stronger morning for that, where the Nasdaq and S&P are kind of fighting for up and down. So they're kind of starting the morning off, kind of back and forth a little bit. Last but not least, we'll look at the bond market. So we started off about the 104.50 level today. That was 12 basis points higher than where we left off yesterday. And we even had a slight uptick, so we were even 18 basis points. And as you can see, we pulled back down. This was actually within minutes of me creating this. We're down 6 basis points, but up 6 basis points from yesterday. So as you see, we had a opening gap, which is we might close that up. Hopefully we'll be pulling back up, maybe closer to the 10-day moving average like we did earlier. But again, it's going to all depend on what's going to happen with the FOMC minutes. See where the comfort level with the investors lie. So be very cautious around 11 o'clock Pacific Standard Time and thereafter, as they kind of review the minutes and make their decisions. All right, but my guess is I think we might have bonds might show some improvement today. As we can see, we did settle above the 200-day moving average, the 100-day moving average, the 30-day moving average, and then today we kind of brought us closer to the 10-day moving average. So it seems to be kind of a pattern that we may get a burst up higher, especially with some of the weaker data that came out over the last couple months, January and this month. That might kind of help us a little bit. So, all right, folks, thanks for watching. Again, pricing really hasn't changed from yesterday in terms of interest rates, so that's what we're mostly kind of looking at today. So as of so far this morning, but that could change later today, especially after the FOMC meeting minutes. All right, thanks for watching. Have a wonderful day, and we'll see you guys tomorrow.